pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Okay. Approval of the minutes of Monday, October 3rd.
And so moved.
All second. Been moved second to approve the minutes of October 3rd as written. Any discussion? Not all in favor, say aye.
Aye.
Carries 4-0. Okay, Tom.
You got,
Oh,
not Tom.
okay, just a minute. Okay. Move to approve exact time electronic time clock system in amount of $12,975.
I'll make the motion.
Funds to come from courthouse general.
General fund, courthouse general.
Fund, courthouse
It's gonna
general.
cover everybody.
Okay, general fund, courthouse general, okay?
This one's still in discovery, or it works, it's compatible with you and,
Well, yeah, I mean, we'll go forward with the implementation and, we have 30 days if something's going wrong or whatever to get out of it and get all of our money back, so.
okay.
What's their discussion on the insurance, or on the vacation sick leave?
They're gonna have that going in January also.
And no cost, no extra
Yes,
cost?
it's gonna be included in the package.
Okay.
Skill set.
Yeah, I'll make the motion.
I'll second it.
Been moved and second. Any discussion? All in favor, say aye.
Aye.
Opposed, carries 4-0. Okay, now, Tom, I think it's you now. Unless,
I didn't see anything else. I didn't see anything.
I've seen that, I just forgot.
Good morning.
Morning, Tom.
So I would like to go into executive session, talk about courthouse security, details of plans and strategies. And I'd like, of course, you to be there, Wade, Eric, and I. It'll be at least 40 minutes probably.
So,
Yeah, okay, 40 minutes,
Courthouse security.
okay, but that's appropriate, motion just to go for executive session for courthouse security, because some of it is,
Well, courthouse security, and then he added the caveat, I think, internal security strategy, which is a law enforcement security measure that does not need to be disseminated to the public.
okay,
Internal security strategy.
Law enforcement strategy. Isn't that, in essence, what you're...
Yes.
40 minutes, do it?
I hope so, sir. You got somebody else coming in at 9:50, so, for your break, so.
We can go a little longer.
I understand, but yeah, let's go
Okay,
till then.
40 minutes, okay. Okay, have a motion to, Don made the motion,
I'll second.
10 seconds. Any discussion, executive session with the sheriff, the undersheriff, the attorney, and the commission for stated reasons. And we'll go in at, let's go in at 9:05. Okay. Oh, all in favor, say aye.
Aye.
People to say I'm fine, I've had that.
Yeah. Back in session, we'll let Wade get back in here. Okay, Sheriff, you got the floor again.
Thank you. Commissioners, it is my recommendation, after discussions with county attorney and you, that we go with option number 5 on our security system, and the security station to go to the east doors of the courthouse. That being said, That will change nothing for the public's entrance or exit during normal business hours. I think that after discussions with county attorney, Steve Prasco, under sheriff, and I, we feel this is the safest strategy for the safety of the citizens and for the employees of the courthouse.
So I'll make that motion to go with option 5, for secured entrance east.
All second. Been moved and second to pursue the security to the east side of the courthouse, changing basically nothing. Any discussion? Not all in favor, say aye.
Aye.
Opposed? Carries 4-0.
Who seconded that?
I did, Tim. Okay,
Thank you, gentlemen.
thank you.
Thank you, Tom.
Thank you.
You gave us time for a break, if anybody wants a break. Tim?
I'd take it.
Well, let's take a 10-minute break, we'll be back at 10 o'clock.
That goes right on time.
Back in. Raymond James, Public Finance, is up next.
Good morning, everybody. My name's Greg Barnberg with Raymond James. Appreciate the chance to be here with you this morning. And also, we appreciate the opportunity to serve as your financial advisor for the bond election for the jail project. Thought it might be helpful to walk you through some information regarding where we're at currently on interest rates, what the financing analysis looks like. There's a couple of structuring options that I wanted to talk to you about, and I thought it also might be helpful just to discuss the process that we would go through whenever you're ready to sell bonds and lock in the interest rates. But also, I had shared some information with the county just to give you a little bit of background about our firm and my experience working on bond issues in Kansas. Raymond James is very large nationally in terms of handling bond issues, consistently in the top 10 firms in the country when it comes to bond issues. And my focus, my whole career has been focused on working on bond issues in Kansas. I've been doing this for about 32 years now. Been very fortunate to work with a number of counties over the years, and I keep track of how many bond issues I've completed. I think I'm up to about 1,100 now. So, but I've worked with Dickinson County, Miami County, Bourbon, Osage, Erie, Riley, Reno, Rice County, Washington, Kingman, Morris, or several others. And county jail projects, many of those counties that I just mentioned, those were jail projects that we helped them finance, either through general obligation bonds or public building commission revenue bonds are really the two primary financing options. But if you will, I included some information in here that I thought would be helpful. Obviously, the ballot question and voters approved the issuance of general obligation bonds on August 2nd. And that gives you then the statutory authority to move forward with the financing and the issuance of the bonds. But one of the first things we start looking at on a project of this nature are what we call structuring options, or thinking through some of the IRS rules related to bond issues, and what you need to take into consideration as you're moving forward with a project like this. And then also, are there any state or federal rules that may benefit the county? And I want to talk about one specific option as we get a little further back into this. But one of the key calculations that would need to be done very early in the process, and this is something we'd want to work with QTech Rock as your bond attorney, is looking at the IRS rules related to tax-exempt financing. And anytime you have more than 10% of the revenue or 10% of the usage coming from what the IRS considers a private source or private use, then that can hinder your ability to do the entire financing on a tax-exempt basis. And oddly enough, the federal government considers itself kind of in that mix of private use. So if you have federal prisoners, and you're using federal revenue to help make payments on the bond issue, that's the calculation we want to work through with QTech Rock to see what percentage of this issue can be done as a tax-exempt issue. Tax-exempt interest rates are going to be lower than taxable. Both are pretty good rates right now, but tax-exempt is a little more favorable. And where you have the county using some cash along with bond proceeds, that gives us a little more flexibility in that calculation of what percentage of the facility will be used or is anticipated to be used by federal prisoners, and how much of that then is allocated to the cash contribution that you're making versus how much of that federal use is allocated to the bond proceeds portion. I don't want to speak for QTech, but we've talked to Joe Serrano about this a number of times, and he has worked with their internal tax attorneys. It's not impossible that we could get to 100% tax-exempt financing and still meet those federal rules. But it's a pretty important calculation that we want to do at the early stages once you authorize us to start working on the bond issue. But the other thing, too, that I think came up in some of your prior discussions, and I wanted to mention this, is that when we start the process for issuing bonds, we usually will have what's called an authorizing resolution. And that's not really a binding resolution on the part of the commission. It's just more giving us permission to start working on the issue, pulling together some information, and I'll walk you through the process here in a little bit. But in that authorizing resolution, and again, that would be drafted by Joe's office at QTech Rock, we would want to put in there what we call reimbursement language. And the reimbursement language means that the county is declaring its that it may use cash for a project, and that you, if you advance that cash before the bonds are issued, then you preserve the right to reimburse yourself from bond proceeds. The reason I mention that is that, it's our understanding the project is, roughly speaking, $20 million in bonds that were approved by voters, and then somewhere $8 to $10 million of cash potentially, depending on final project costs. And if you were to spend some of that cash first, and then find out that the total project cost comes in a little bit lower, then you can use the bond proceeds to reimburse for a portion of those cash expenditures. Just gives you that flexibility to do so, and that reimbursement language doesn't require you to reimburse yourself. It just gives you the ability under the IRS rules to reimburse yourself for any cash expenditures. You can then switch those over to where they're paid from bond proceeds rather than from cash of the county. So those are,
By using bond proceeds, then we can reimburse the funds that we used up front and save us on the interest cost for that $2 million or $3 million that we reimbursed.
yeah, so let's, if I understand your question correctly, let's say you have some preliminary costs. Sometimes there's design fees or just some upfront costs. Most of those are usually soft costs. I mean, you probably haven't started hard construction, brick and mortar or moving dirt. You have the ability to reimburse yourself for soft costs. There's a lot more flexibility on that. And then once we adopt that reimbursement resolution language, then you can go back, I can't remember, it's either 30 or 60 days prior to the time you adopt that resolution. Then you can pick up any hard costs from like 30 to 60 days prior. So if you have spent, say, $2 million, and you really would like to have that, rather than have that spent out of cash of the county, you'd rather now have that paid for from the bond proceeds. Once we close the bond issue, then you can reimburse the county for those initial $2 million of costs. If you issue the bonds up front, then you may want to go ahead and start spending the bond proceeds first, and then as you get towards the end, then you're spending the county dollars, and obviously you'll spend the county dollars until you get the project complete, and if it comes in a little bit less, then you don't have to worry about reimbursement because you're just minimizing what the county is spending. So does that answer your question?
Yeah. But if you use all your bond money first, you're paying interest from day one on the whole thing.
Yeah, and I want to...
Technically.
Yeah, you would be, exactly. But the other thing, too, is that if you issue the bonds now and you take that money and set it in a project fund, and then you have the project fund invested, One of the big changes that's occurred in the bond market this year is those short-term interest rates have come up considerably. And right now, the 2-year Treasury note, I believe, is right around 4%, somewhere in that area. So if you're selling bonds at 4% and then just taking that money and putting it in a project fund, you might be able to have it pretty close to a wash because you're earning about the same amount that you're paying in interest expense. Yeah, it is. I'll walk you through a couple of scenarios, and I think that might answer some of the questions about, or give you some information so you can make a decision about whether you want us to issue the bonds now, wait, even issue part of the bonds now is one scenario I wanted to share with you, and then think about whether you spend bond proceeds now or cash of the county now. If you and before I get into those scenarios, if you wait to issue the bonds and you spend county cash now, then the cost to you is you're losing the investment earnings on those cash deposits rather than have those sit in the accounts of the county. But if you wait to issue the bonds, then you're avoiding paying interest expense. But if we issue the bonds and then invest it at an interest rate pretty close to what the bond rate is, then those bond proceed dollars are really not costing you much, if anything, if they're invested at an interest rate close to what we're paying on the bond issue. So turn to page 7, if you will, and I'll walk you through 2 scenarios. The first one is if we go ahead and issue, we're showing issuance of just slightly less than 20 million, and I'll walk you through what the premium means there. But really what we're solving for is a deposit to the project construction fund of about $19,960,000. That's a number that we had been given early on in the process. You probably have better construction estimates right now, but really trying to have something close to and slightly under the $20 million amount. So in this scenario shown on page 7, we would move forward with the sale. You would have a closing on December 1st. You would lock in the interest rates about halfway through the process. We're issuing all, 20 million or slightly less than 20 million in one series of bonds. And we've assumed that we would have interest rates that we're seeing in the bond market today for a AA rated bond issue. I know the county hasn't obtained a bond rating for quite some time, and I don't think you have any bonds outstanding that have a bond rating. We've looked at your financial statements. We feel pretty comfortable that AA category is a pretty good place to start on where your bond rating would settle out. And then what we would end up with is an average interest rate of about 4.16% in today's market. When you think back to the notice of election that was published, we had an estimated interest rate of 5.27 in that publication that was shared with voters prior to the election in August. And then we're setting this up as a 20-year issue, pretty level payments throughout the life of the issue. And so one of the statistics that we look at is what's called average life, or at what point have you paid down half of the principal on the issue. And so the average life here would be about 11.6 years. The page 7, I'll walk you through that just a little bit because it's what we call sources and uses of funds. In other words, when we sell the bonds, what are the proceeds that we expect to receive, and then how are those proceeds spent or allocated? What's really interesting in the bond market, and I'll show you a couple of slides back, but when we sell the bonds, Kansas statutes require us to go through a competitive sale. And so we publish a notice that on a date certain we'll take bids for the sale of the bonds, and we're requiring bidders, they have to pay at least par or 100% of the face value of the bonds at that sale. We give bidders the flexibility that they can also pay a premium into the county. And what's really interesting is for probably 95% of the bond sales that we've been involved in for the last 8 to 10 years, that premium is always seems to be part of the bids or part of the sale proceeds. So not only would they pay 100% of the face value of the bonds, but you will likely receive some amount of premium. Here, with the interest rates that we got from our trading desk when we ran this analysis for you, it's producing about $800,000 in premium. So you end up with $20,227,000 of sale proceeds that are paid into the county. And then you look at how those would be spent or allocated down below under the uses of funds. And again, we used that $19,960,000 number. I think we had picked that up from one of your earlier reports. But we'd want to work with the architect and obviously the county, and when you get your construction team on board, to figure out what amount of deposit to project fund would you want out of this bond issue. Are you simply looking to maximize as much as you can from the sale of the bonds, which in turn would minimize the amount of cash you have to spend on the project? But here, just for illustration purposes, we have the $19,960,000 going into the project fund. So that would be deposited on December 1st, and you would want to coordinate making sure you have an investment plan figured out so that when you receive that money on December 1st, it's invested. And as I had mentioned, like Osage County, we went out and bid out U.S. Treasury notes, a portfolio of Treasury notes. And right now, the 2-year Treasury note is pretty close to that 4% rate. So you would be borrowing at 4%, and then when you put that money in a project fund, should be somewhere in the neighborhood of 3 to 4% is what you'll be getting on the investment earnings. But everything below that $19,960,000 is what we call cost of issuance or financing-related expenses. Bond attorney fee, financial advisor or municipal advisor, that's our fee for helping you through the process. State treasurer will serve as paying agent. When we sell a bond issue, we might end up with 20 or 25 different investors, and the bonds can change hands over the life of the bond issue. You make one payment to the state treasurer. They then are responsible for getting that divided up and allocated among the bond investors. Then you also have the rating agency fee. When we look at a bond issue like this, we determine is it beneficial to you to have a bond rating. If you have a bond rating, it typically results in a lower interest rate, and so we'll look at the interest savings relative to the cost of the rating fee. Here we've estimated that fee would be about $23,000. And then the underwriter's discount down below, when we put this out for competitive sale, the bidders will figure in a amount of profit or compensation that they want to obtain for buying and then reselling your bonds. And so we've estimated here that the $145,000 would be roughly 0.75%. But again, that's all. When we go through that competitive sale process, we can't control what fee they will charge. We'll just simply look at who gives you the best overall best bid, which is going to be a combination of their fee and the interest rates that they propose. So the following pages, one thing I wanted to point out on page 8, I think there may have been some confusion over how interest is calculated on a bond issue. It's really no different than any other form of financing. You have the initial principal amount of the bond issue. Then as you pay down principal each year, then your interest is calculated on that lower amount. And so you can see here we've got $19,420,000 in principal being repaid beginning in the year 2023 all the way to 2042. We've assumed that this would be a 20-year financing. And then if you look at that coupon rate, that's the stated interest rate on the bonds, but turn to page 9, if you will. And so it gets a little bit confusing when you look at how bonds are sold and what the actual return or yield for an investor will be, and then how that premium gets calculated. But if you look at the 3 columns there in the middle, rate, yield, and price, What I tend to focus on the most is the yield column. That's the return that an investor is going to get for buying your bonds. And so, for example, if you look in the very first year, we've got a what's called coupon rate or stated rate on the bonds that's above market at a 5% rate. That investor is actually going to pay you a purchase price of 101.422%. They're paying you a premium, and by the fact that they're paying more than the face value of the bonds, what that really means is that investor is getting an overall yield or return of 3.06%. You go all the way out to the 20th year, 4.49%. And all of the stated interest rates, the reoffering yields, the fact that many of these are being sold at a premium all translate into that average borrowing cost, again, of 4.16%. So I know that's a lot of numbers, and it's probably confusing, and especially when you start talking about premium and discount and how you arrive at all of those calculations. But we wanted to show you a scenario that if we put this out for competitive sale today, and it's a tax-exempt issue, what do we think that the average borrowing cost would look like, and what do we think the premium or discount, how does that all settle out? So this is a scenario that we, again, worked with our trading desk to estimate what interest rates would be, this past week, so that we could show you today what we think a scenario as a, based on what the current bond market looks like, what the current scenario would be. So any questions on that before I move into an idea that I wanted to share with you?
If the county decided to make early payments, is there any penalty on that?
Yeah, good question. I should have touched on that. So typically on a 20-year bond issue, you'll have a period where the bonds are what are called non-callable. You can't prepay the bonds. And what we try to find is what is the shortest call feature or prepayment feature we can put on the bond issue without putting upward pressure on the rates. We just had a bond issue we sold last week for Geary County, and that actually was a 30-year issue, and we had a 7-year call feature. So once you get to that 7-year point, you can start paying down principal without any penalty, and it has to be in $5,000 increments. But you can just simply give notice to the state treasurer that you want to redeem an extra $100,000 in bonds, and then the state treasurer will tell investors, and then you prepay the bonds, at your discretion once you get to that 7-year point. I think on your bond issue, it would not be any longer than 10 years, and we were really pleased to see that we were able to get to 7 years on Geary County last week, and I think that's where we would start on your issue. So any other questions? So I'll further complicate my discussion, and I apologize for that.
You've already gotten there.
I know, I'm sorry.
So, I guess I will ask, I'm still a little bit confused about the yield.
Yeah. So, in other words, how do we calculate that, or what does the yield mean?
Yes.
Yeah. And so, when bonds are sold to investors, they can be sold at what's called par, or 100% of face value. In other words, if you're buying a $5,000 bond and you sold at 100%, then you would write a check for $5,000. That would be your investment. But bonds can also be sold at premium or discount price. So a discount price would be less than 100%. So in other words, you might pay 98% of the face value of that bond, so you pay slightly less. Or you can pay a premium, 101%, that example that I had shared with you. And so an investor would look at the bond, and it all is based on what is the coupon rate or the stated interest rate on that bond. And so if you go back to that example on that bond pricing page, page 9, the bonds in year 2023, An investor is going to pay, if this is the way the bond would end up being sold, that investor would pay 101.422% of the face value of the bond. They're going to pay more than the $805,000 principal. They're actually going to pay a premium of about $11,000 to the county.
More than.
Yeah, and so when you think about it, well, why would an investor do that? It's because the stated interest rate on that year, the bonds coming due in 2023, is higher than the current bond market yields that an investor would get. So the bond investor is willing to pay a premium because they know that interest is going to be calculated based on that 5% stated interest rate. And when you look at that bond investor, that they're paying more than face value of the bonds, but they're getting, in exchange for that, they're getting an above market interest rate on that year, then the combination of that stated interest rate, the premium, results in a yield to that investor of 3.06%.
It just had to go through my mind one more time.
Yeah,
I guess.
I know, it is really confusing, and from our perspective as financial advisor, we want to give bidders enough flexibility so they can go out to investor base, and bond investors are mutual funds and insurance companies and trust departments and individuals and banks and some corporations. We want to give a bidder enough flexibility that they can go each year, when we sell a bond issue, they're going to sell the principal coming due each year to different investors. Some investors may buy a 1-year bond or a 10 or a 20-year. If we give them enough flexibility, they can go out and find out that a certain category of investors may be very aggressive in the current bond market. Like you might have mutual funds that are really active in buying bonds in that 15 to 20-year range, and that mutual fund may say, we want to pay a premium. We feel that that's kind of a defensive investment strategy, and we'll actually accept a lower yield if we can buy the bonds at a premium. And so what you're really trying to do is find out, let the bond market and the investors and the underwriters come back with bids, and they'll look at premium or discount. And what we're really most worried about is getting to that lowest possible yield. That yield really is kind of one of the key factors in the average rate for the county. And if the bonds can be sold at a slight discount and that gets a better yield, then that lowers your borrowing cost. Or if they can be sold at a premium and get a lower yield, then that lowers your borrowing cost.
Right. Our treasurer, question.
The easy way to explain that is let's suppose it's a 5% is the current rate, and we're selling bonds at 3, who wants that? Because the current rate's 5. So it's gonna sell at a discount.
Right.
To make the rate get up to 5. And conversely, if we're selling at 6%, I want that, so people will pay extra, which makes the average down to 5.
Yeah, and that's a good point. I mean, if you look at our analysis again, I'm sorry I'm spending way too much time on that page.
No, you're fine.
But you get out to the latter years, the last, 5 or 6 years, those are all shown as being sold at a discount. And so really, what you're most interested in is getting, maximizing the funds available for the project at the lowest possible borrowing cost. And if we give the market that flexibility to determine premium and discount, we don't really, it's not that we don't care, but we're most interested in is getting the lowest overall borrowing cost, not really getting hung up on whether 1 year is sold at a premium or a discount. But again, this is pretty close to what you would expect to get if we were taking bids today for the bond sale. Okay, so page 11, this is the idea I wanted to share with you, and kind of where we are at in the current calendar year may be an important factor in considering this. So I mentioned at the start of the discussion that there's some IRS rules related to tax status of the bonds, and there's one section of the IRS tax code that is what's called bank qualified, and it's a special tax treatment that banks, they get to deduct 80% of their cost of carry for buying a municipal bond. It's a tax treatment that helps motivate banks to purchase bonds that have that bank qualified designation. And the IRS put that in place to help what they call small issuers, and they define that as any city, county, school, or other entity that sells less than 10 million bonds per calendar year, tax-exempt bonds, then you can designate those bonds as bank qualified. This chart on page 11 shows historically what is the value of that bank qualified designation in terms of how much lower interest rate do you get if you sell 10 million or less in a calendar year. And you can see there are periods of times where it's very valuable, and there's periods of time where it's not valuable at all. And so we asked our trading desk to give us interest rates if we intentionally sell 10 million this year and then come back and sell 10 million next year. We could designate both of those series of bonds as bank qualified. How much better interest rate do you get, and really what is that worth? On page 12, we calculated that's about 0.15%. If you were selling bonds today, it'd probably be about 0.15%. It was kind of a rough way to look at that. And you'll see in our average interest rate doesn't quite work out to that, and maybe actually a little bit more of a benefit. But that slightly lower interest rate would end up saving about $946,000 of interest expense by splitting it into two series. Now, there's a couple of things to think about and so you go through the sale process twice, so you'd be paying some of the cost of issuance would be duplicated. There'd be about $72,000 of costs that you would be paying. You'd be getting you'd have two bond sales. You'd have to pay for a rating this year and then come back next year and pay for a rating, and some of those costs are just per issue, not based on the principal amount of the bonds. So you do have so you're paying $72,000 to do two sales, saving $946,000. That seems to be a pretty good trade-off. But the other thing too that you would want to take into consideration is you're taking some degree of interest rate risk. If we sell 10 million now and then we come back the early part of next year, so we calculated how much would rates have to go up before we lose that savings we were trying to get. And we did a calculation, it would be about 0.86%. So you'd probably, that second series of bonds, you'd probably, if you had an interest rate of say 4.8 instead of closer to 4, then that's when this plan backfires. You wish you would have just sold all of the bonds at once. But I did, yeah, that is exactly it. I wanted you to be aware of it because I was a little surprised. I mean, it's a pretty significant amount of interest savings, but you don't want to have that plan backfire on you. And I'm not suggesting this is the route to go, but I wanted to at least give you this option so that you could be thinking about it as well. So there's some supporting schedules behind what I just described. I won't go through those in detail. They're very similar to what we just talked through on that first scenario. But if you don't mind, I'll shift the discussion a little bit to process. And page 20 has a calendar of events. This calendar of events shows the steps that we would go through to complete the bond sale. And Kansas statutes require that for general obligation bonds that are more than $2 million in principal amount, that you conduct what's called a public sale or a competitive sale. And so this calendar shows the steps that you would go through to publish notice of that competitive sale, take bids, and then complete the closing. And a couple of the key dates that I would point out here, obviously, we're showing October 10th here today, just talking about the plan of finance. This calendar assumes you would roll right into the bond sale, and I'm not pushing you to do that. It just shows you the timing. So if you said we're ready to go, then we would start working on what's called the preliminary official statement, and that's a prospectus or offering document that's given to bidders and investors. We would work on updating the financing analysis and do some fine tuning. We'd send a rating request to the rating agency. Here we would assume that would be Standard & Poor's or S&P. Moody's is the other rating agency that we could consider. And then Joe Serrano's office at QTAC would start drafting the bond resolution and the legal documents and the notice of sale and everything that we would need to move forward with the bond sale. Once we have that notice of sale prepared, we're required to publish that. That would occur on November 4th. We're showing a sale then on November 14th. And so on the morning of November 14th, we would have a deadline at, say, 9 or 10 o'clock in the morning. The bids come into a website, and then at 10 o'clock, if that's the deadline, then we can open up the bids, see who submitted the best overall interest rates, and then award the sale of the bonds to the low bidder. We would then update our numbers. Joe would update the legal documents pretty quickly. We would then bring that into you at the a commission meeting that day, share the sale results with you, and if the bids are acceptable and you want to lock that in, then you would adopt the bond resolution. The bond resolution is actually a binding document on the part of the commission. That's where the interest rates are set. You agree to sell the bonds at those interest rates. I did want to back up on October 24th. I mentioned this earlier in the meeting. October 24th, we would have an authorizing resolution. That doesn't obligate you to complete the sale. It doesn't obligate you to take the best bid. You can cancel the sale if you want, or delay it. But it really gives our firm and Joe's firm permission to start pulling everything together and move forward. But that authorizing resolution is where we would include that reimbursement resolution language as well. So if we take bids on the November 14th and everything goes well and you adopt the resolution, then Joe's office would need probably 2 or 3 weeks to prepare the transcript, which is all of the legal documents, send that to the Attorney General's office. They have to sign off on that everything was done properly. And then once we have the Attorney General approval, you would schedule closing, and on the closing day, the underwriter of the bonds would wire transfer the purchase price to the county. Once we verify that you've received the money, then we release the bond certificates, and those flow on to the ultimate bond investors that purchased your bonds. And at that point, then the bond issue would be closed. You'd have money in that project fund, and again, you'd want to make sure you have a plan for how that would be invested, so that if we close on the 8th, it becomes invested that same day. And typically what we would do is after the sale, if we have a successful sale, then we focus in on making sure if it's a portfolio of treasury notes or the state municipal investment pool or whatever option you choose, local bank CDs, then make sure we just have it coordinated so that the money's invested when you receive it on that closing date. So the last thing I would touch on is probably have some questions about interest rates and bond market. There's a lot of talk about interest rate increases. Page 22, most of the, when you pick up the newspaper and you see the headlines that say interest rates increase, that's typically the Federal Reserve raising short-term rates. And they've had a number of short-term interest rate increases this year. The short-term rates, like, and Federal Reserve is controlling like a 90-day interest rate. But the short-term rates have really come up. The long-term rates have come up as well, not quite to the same degree as the short-term rates have increased. And when you look at page 23, it's disappointing when you look back over the last couple of years. We set the all-time record low in August of 2020, and so we're up from where we were, during the pandemic and record low interest rate levels. But what's interesting is we're kind of right back to where we were in 2018, 2019, and we were pretty excited about the interest rates back then. It's just maybe a different perspective where we are today, coming off the record lows. You have a little bit of a disappointment, whereas just a few years ago we were kind of excited about the same interest rates because we've been dealing with some higher rates prior to that.
How soon before you break ground, do you usually sell these bonds? I mean, once you want, you know what I'm saying?
Yeah,
I mean, 'cause we're looking at, what, 6 months or better before
Mhm.
we even break ground, so.
Yep, and it varies. And we've had some situations where, the issuer of the bonds, you know, could be a city, county, or school that says, look, we don't want interest rates to get away from us. So we're gonna go ahead and lock in the interest rates now on the bond issue, deposit the money in a project fund, have it invested, and that way we don't have to worry about interest rates increasing.
So we're back to that crapshoot deal, if we wait.
You are.
That's exactly what it is.
Yeah, and that's the tough part is you know, it's been an interesting year in the bond market. And the economic statistics, you know, 1 week you think, okay, well, things might be slowing down a little bit, like we saw factory orders and the purchasing manager index, you know, looked like things were slowing down, but then the jobs report comes in strong, and you think, well, you know, it's just hard to figure out what direction, where we're headed. The big driver in interest rates going up this year, I think most people would say has to be inflation. So the big question then is for rates to stabilize or settle down is, okay, when do we get inflation under control? And that's the tough part to figure out. The one thing to keep in mind, and going back to your question about how soon or when can you sell the bonds, there's an IRS rule that when you sell the bond issue, you have to reasonably expect to spend 5% of the proceeds within 6 months and 85% of the proceeds within 3 years. And so, the 5% of the proceeds, it sounds like you already have soft costs that probably are, you know, to that amount. But you would not, if you could not reasonably expect to spend 5% of the proceeds within 6 months, then you would want to wait closer to when you actually are going to break ground so that you can meet that requirement. If interest rates were stable, then you know, a lot of the cities and counties and schools that I work with may say, well, let's just wait and get a little closer to when we need the money and sell the bonds at that point. But the wild card in all of this is, where will interest rates be? Will we be better off pushing ahead now or waiting 6 months? Is there any advantage to selling 10 now, and then, you know, then you can delay that second sale of 10? You'd have a lot more flexibility to get into 2023. So,
Our soft cost is gonna be around 9.6%,
okay.
and you mentioned 5, is that 9.6 a little higher than it should be, or a little higher?
No, that's just the IRS. IRS says that they don't. That IRS rule, they want you to spend 5% of the proceeds within 6 months. It doesn't have to be on soft costs. It can even be on hard costs. They put that in place because they don't want you selling bonds today and then say, well, we're not going to do this project for 3 years. We'll just have this money sitting here. And we've had some times in the bond market where you could, say, borrow at 3% and invest at 4%, and the IRS said, we don't want you playing that game. Sell bonds for when you have a project and start spending money within 6 months.
Because we don't have any hard costs for 9 months.
Yeah.
If we do the reimbursement resolution, then the soft cost that we've got, we can take that out of the bonds
Yeah.
right then.
And that's exactly what I was saying.
And that gets us in our 5% deal.
Yeah, you've probably already met it from what the comment earlier, just what you've spent, and if you reimburse yourself from bond proceeds, then.
Because we're gonna have other expenses over the next 6 months.
Yeah, so then you become focused on, well, will you spend 85% of the proceeds within 3 years? And I think the construction timeframe, you
Yeah,
probably wouldn't.
that's not a problem there.
Yeah.
Because the project be over in 28 months, so.
Yeah.
You mentioned the bond interest at 4.16, and then you mentioned the treasury deal, treasury notes,
Mhm.
2 or 3 different times.
Yeah.
I guess I'm a little bit lost there. Are we gonna be able to invest that where we receive mostly the same amount back we're paying for them?
Yeah, that's why I was mentioning that, is we are very close now, where the short-term investment rates are gonna be pretty close to the long-term bond rate at which you sell the bonds, your interest expense. If you borrow it, you can borrow at 4% and then turn right around and invest that over the next 2 years at 4%. Then while that money sits in your project fund, you're not really losing ground. And let's say you go back to couple of years ago where the short-term investment rates were 0.5% or something like that. It would be a different scenario if you were borrowing at 4% and then turning around and had that money sit there and you're earning 0.5. You're losing money every day while it's just sitting there. But we've gotten to a point where it may not be an exact match, and I'm not sure how you would plan to invest the proceeds. But like I said, Osage County just had treasury notes, and right now the 2-year treasury note I think is pretty close to 4%. I want to double check that. I didn't look at it this morning, but so you might be a little bit of a differential, but it's getting pretty close to almost a wash. That's why I had mentioned that.
Still, it's better than losing 100% of the interest.
Yeah, and that may take some of so you think about, well, if we sold the bonds, we sold them all now, and then you start your actual hard construction in 9 months, that's really when your construction monthly draws are going to start ramping up, and you start spending down that money. But if you can invest it at close to what you're borrowing, then that becomes a factor in thinking, well, do you move ahead now or do you wait? If you were losing money in that project fund, then you're kind of motivated to wait as long as you can, just to minimize that.
Who handles the process of investing into the treasury? Does our treasurer do that, or does your firm do that?
Typically, we turn to city, county, and schools that we work with when we have a project fund like this, and we find out, how do you typically go about investing funds of the county? Do you turn to the local banks first, some for CDs? Do you use the state municipal investment pool? And then another option is some entities will just buy treasury notes or treasury bills. The statute for investing bond proceeds is a little different than your idle funds. It's KSA 10-131, and you've got a little more flexibility in the options, but most people will stick with local bank CDs, state pool, or U.S. Treasury securities, treasury bills and treasury notes. The challenge, and I usually turn to the county and say, what is your preference? And if they say we've got great relationship with the local banks, we want to work with them first, then that's what I suggest is let's go talk to them and see if they want to handle the investment of the bond proceeds. The challenge for a bank is the collateral for the deposit of public funds. They would have to have collateral, and sometimes the banks can be very supportive of a city, county, or school, but they just don't have 20 million of collateral sitting there that they can pledge, and so they say, well, this doesn't fit, or it does fit. That's usually a good starting point, is turn to the local banks. We can look daily online at the state municipal investment pool and see what rate they publish. And then and you can compare that to treasury notes, or you can just say we want to work with the local banks. But then if it comes to bidding out a portfolio of treasury notes, then that's something we can help you, collect bids for somebody to offer 20 million of treasury bills or treasury notes as the investment vehicle.
Our county treasurer has another comment or question.
So we wouldn't be able to invest that because our banks already say we have as much money as we can hold. But the other side would be, where do we see inflation being in a year or 9 months, whenever it is you think you might want to issue? So getting them done sooner, I don't see rates being any lower. That's just me. They're more in tune with that. But if we take the money now and the rates actually go up, then potentially we could wind up making a little bit of money. Not that that's what we're looking for, but that's possible if rates are now higher than what our bond issue is. So I would say the quicker the better.
Yeah, and we don't have an exact construction draw schedule, but we ran some real rough calculations, and it's a meaningful amount of money. It could be, $750,000 pretty easily in terms of what you might earn on investment of the bond proceeds. So that's why I keep saying you want to make sure and have a plan. You don't want to just park it in a money market account that's not earning a whole lot or something like that.
My money market's making 3%.
Okay, that's great. Yeah, and so if you got a money market that's paying that level, then that's an option too. But anyway, when we You don't want to get, especially if you're buying treasury bills, you want to wait until you have a successful sale. If you had something that caused you to cancel the sale, bids came in high, or some disruption in the bond market. But once, in this calendar, once we got to November 14th, we want to roll right into what is the plan for investing the bond proceeds and make sure you've got a good option set up for that day of closing.
We've also got 4 banks in our county. It's pretty aggressive, and they want to be a part of loaning us 10 million or 15.
Sure.
Can that be a part?
It gets so the voters authorize general obligation bonds, and the Kansas statutes say that any bond issue over $2 million, you have to go through that bid process to take sealed bids for a competitive sale of the bonds. There is a way, if it's less than $2 million, and the other, you don't have to go through the sale process if you have what's called a refunding or refinancing component. You don't have any outstanding bonds, so we don't really have anything to refinance. But there is if you got strong interest from the local banks and determined that it was in your best interest to coordinate the sale of the bonds with the local banks, then we could issue $2 million of bonds, which doesn't require the competitive sale, and then close that issue and then refinance a small portion of that to then complete the other $18 million of placement of bonds to the local banks. We have done that before. It requires an extra step in that process, but one thing I had thought about is that whenever you're ready to move forward with the sale, we could obtain quotes or a proposal from the local banks of what do they, what would their interest rates look like, and if it's advantageous, then we would go through that process I just described. Or if they said we're interested in $5 million but not 20, or we've had that come up before, then we could coordinate, figure out a plan for placing part of the issue with the banks and then doing a competitive sale for the balance.
So you could possibly do, just say for instance, 2 million 3 different times. Say there's 3 or 4 or 5 banks want to participate in it. You could do 2 million to each one, possibly.
Sure.
Or all of it to one, but they probably won't be able to do that.
Yeah. It seems like everything I talked about this morning is a little more complicated, but there's a complicated process where you could get the bonds placed with the local banks. And again, if you gave us direction that was what you wanted to do, or you wanted us to get proposals or quotes to see what that would look like, and then it became clear that that's in your best interest, then yes, there's a way where we can work directly and keep the local banks involved. You're not the first entity that I've worked with that has said our local banks are very supportive and we want to keep them involved in this process. Go figure out a way to make that happen.
Would you still be able to invest that money that they would loan? Would you still be able to reinvest it into something else to try to?
Yeah, you would. And so if you think if we sold 20 million in bonds through a competitive sale, and let's say it's an underwriting firm out of New York to put in the best bid, they wire transfer you on the day of closing that $20 million for the bonds. If we coordinate a placement of 10 million with the local banks, then on the day of closing they wire transfer you the 10 million, and then maybe we come back later and sell the other 10 million. That money is then paid to you. You receive it at closing and would invest it in just the same way if we went the competitive sale route.
If that's the direction we like to explore, right now is probably the time to ask you to explore with the banks to see if they want to participate and with the rates that you're talking about or thinking about.
Yeah, and that's a pretty standard process that we go through. It's what we call a direct placement request for proposal. We send out some financial information on the county, some draft schedules of what the principal repayment would look like, give them enough information where they can tell us what their interest rates and their proposal would look like, and then we could go through that process and bring that back to you and share that with you and see if that's the direction you want to go. And there's no cost to the county for
That's what I was
exploring.
gonna ask you.
Yeah.
Does that increase the cost for that extra
No.
procedure that you're?
No. In fact, there's no cost associated with taking those proposals. I mean, we do that and we don't charge any more for that extra step. But if you do the direct placement, then we can avoid some of the costs, like the rating agency fee. You probably wouldn't be paying that. So you could actually not only find out if there's local bank interest at favorable rates, but it might save you a little bit on the cost of issuance as well. So I appreciate, first of all, the opportunity to work with you on this, and second, the chance to visit with you this morning. And I know it's a lot of numbers, a lot of schedules, and I hope I didn't complicate or confuse matters. But hopefully it gives you some thoughts and that you can consider as you think about timing of when you might want to sell the bonds or how you might want to proceed. So thank you again for your time this morning.
Thank you.
Thank you.
That sounds like a no-brainer. Why wouldn't we request to the local bank?
I'd say
I know, I don't know, but I have in the back of my mind that maybe the local banks will possibly be used up on the, if something goes through up north. So I don't know if they'd get too much tied up.
I don't think their rates can match what we're doing on the bond side, because if the bonds are being placed more direct, whereas they're gonna have to have a write-up so the bank can make money, if you wanna think of it that way. And so, if it's not being paid off early, a lot earlier, like in the 5 or 6 year range, I don't think the banks are that competitive with the numbers I put together.
I just assume let that decision be upon the banks.
Right.
So give them the opportunity.
Because I've seen.
They want in, they want in.
We're giving you
They've
numbers.
been
So
through
there's
here.
nothing against it, but I'm just telling you, that's probably the direction it's gonna go, and what you said with being up north, they're happy with that.
They came to us 12, 13, 14 months ago, and then we hadn't heard too much, for several months, then they back in here 6, 8 weeks ago, whenever. To me, we owe them at least the opportunity to review.
Exactly.
I'm sorry,
I agree.
I think we owe them some,
So I will.
whatever you wanna call it. We owe them the opportunity to entertain.
That's probably the direction it's gonna go, though.
Yeah.
I mean, the answer might be, this is obvious why we're not doing with you.
Right.
Yeah, so if that's your direction, I'm happy to go through that process, and I can, typically it takes maybe 2 or 3 weeks to kind of get information back. But we can go ahead and start that process and then bring the results back to you and share what we've come up with.
I'd say reach out.
Originally, there was one person, one bank that reached out to us some time ago, but when they came back in here 6, 8 weeks ago, all the banks were represented. So I don't know whether you need to reach out to all 4 of them individually, or reach out to the lead person that started it 15 months ago, which Andrea could give you the information you need.
Okay.
Okay, perfect. Unless you directed us otherwise, a lot of times what we'll do in this situation is we'll send the request to each of the banks individually, and then they can just, and we give them the ability that if they want to respond jointly, they can, or they can respond separately. That way, they can decide whether it's a collective response or an individual response.
That would make sense.
Well, thank you again.
Thank you.
Appreciate you coming.
Happy to be here.
Continue on, Bob.
Well, all right, we're at lunch,
Everything going good?
so,
we're,
Kurt.
Kurt,
Oh, Kurt. Well, okay. Yeah, he's with us. Kurt, come on up, yeah. Sorry, I really knew that.
We have a lot going on, and I know that's kind of a lot to keep track of, but wanted to make sure with this construction manager selection process, just everyone's on the same page and moving forward. Did you guys get an RFP to send out that Sydney helped put together? So there were,
For the construction manager?
yeah, so there's 3 phases. We sent out the request for qualifications, and then,
We got presented with 3 applicants last week.
yeah. So then we move forward to phase 3, is a request for proposal, which is gonna be more detailed information from everyone. So in the request for proposal, that's gonna include, that there's gonna be a pre-construction fee. So over the next few months, like, our project isn't finished design yet, we have an approved floor plan, but we need to go through, like, what's the wall and roof made of. So we'll work with the construction manager to help with what stuff costs now, because that's been a little weird lately, and kind of help select what the best mechanical systems, all that. That pre-construction fee will be in the request for proposal, and then from pre-construction to building the building, that's when the construction manager will act as contractor, and then they're gonna get bids. They'll break the project into, like, mechanical, electrical,
Right.
and they'll get a bid for each scope, and then they'll be able to review that with you.
But yeah, we haven't selected a manager yet, so.
Right. That's where I was hoping to take this opportunity to just walk through what that overall process is.
Okay, all right.
So you did set interviews with all 3 of them, and then we want to move
Yes.
forward.
The interview is set up, what, for next week, the 31st of the month?
Go back and look at the email.
I think it's set up for the last Monday of the month,
The 24th,
24th.
yes.
Okay, so we have, today or this week, you would send that RFP to the 3 contractors, and I wanted to double check if you have that information, or do you have any questions with that?
I don't recall that information.
You guys, did you get an email from Sydney with the request for proposal that could be sent to the 3 contractors?
I did not.
Okay, I'll resend it, make sure everyone gets this.
We haven't seen any information that I'm aware of.
This is the only information that is the 3.
These 3 books already received.
Yes.
Okay, and
No,
so,
no proposal, or request for proposal, so.
so the statute will outline, there's like three steps you follow. The first is qualifications, so all 3 contractors are qualified, you know, we're comfortable moving forward with any of them, and you guys are. So then we send out the request for proposal, which is gonna be that with a little more information added to it.
Okay,
So that additional information will include, like, they're gonna have a % profit margin, so if they're like, one company might be 5, the other 3. So that'll help you pick which one of the 3 you wanna move forward with. And then the pre-construction cost, which is gonna be a gross fee for what it's gonna charge them to do this next few months of finishing the design.
Angie, did you get anything from Oberg on proposal for?
I got the drawings, I don't know.
We have it, it'll get printed on either day or in a few months.
Did I receive it? Was my name on it?
I think we sent it to Angie.
Is that what this is?
Don, they're all the same. Pass one to Jesse.
Yeah, just pass it down.
Well,
Is this it, Kurt?
right, one more.
One more.
We're,
Do you know it's me?
This dates were set up for the 31st for the interviews, which is still 3 weeks away.
So we haven't seen the RFP,
So,
I guess that's the key.
Okay.
quite
Can you
similar.
send it to me?
Thank you. I will double check, and if not, I'll resend it today, if you have it.
Parking lot pro.
This is very similar to the RFQ, like I said, that you sent before, the same letterhead and everything. The only difference is it just adds a level of information so that,
I don't remember that, how long ago was that sent, like pretty recently?
That was right after Larry, that was last Monday, wasn't it?
Last Monday, Larry was here.
This is what I got, just the drawings and the,
so this would have been Thursday evening.
was that from Sydney?
Yeah.
I have CM selection,
We
update,
haven't received your RFP.
final schedule,
We have not, or I have not.
Thursday, CM selection, Kurt Kramer.
It sounds like we haven't received anything in the office.
I mean, I haven't, you know.
And normally what I get, I see your name on, but yeah, your name out of the
So we've mostly been sending email to you guys and not you, so that you can, make their lives a little easier if possible.
Yeah, I didn't get that.
It should have been sent to Angie, the clerk.
Angie said, we received this from Angie.
I emailed you this,
Yeah, we
everything that I
received
got.
this last week.
we received this,
The
but
RFP should have been sent.
Can you just forward it to me real quick and I'll print it off?
Your Angie K. card.
The only way to make it easier on us is to vote out. Get voted out.
hey,
Or retire. I need a nap.
This is a rough day, I know, between both the finance and the CMR, I mean, there's a lot of information right here and a lot that has to get done. But that's why we'll keep showing up and helping you however we can.
okay. So we distribute this RFP, or you?
You'll send it out,
Okay, all right.
cause everything, like you guys are the boss, you're in charge of everything. I'm kinda only here to help.
You basically hand it off to us and
We
we
can
send it
hand
out.
that responsibility off to him, can't we?
Yeah.
No, I was joking. That's supposed to be kinda funny.
Not me, Sydney.
Not you, Sydney?
Right.
Okay, well, we'll pass it off to Sydney then.
I haven't seen anything yet, it's still not come in.
Oh, I don't have internet, hold on. That would,
Should be an open hotspot here.
okay.
Okay, Teresa, which one's the oldest?
The boy. 2 minutes.
2 minutes.
Almost a pound difference.
I've already started my research on the construction managers.
So when we do the interviews, and like an overall, just talking about the process is fine, but I think if you're talking about any of the particular contractors, or I know the chief, called a bunch of references, I think that those conversations you wanna keep like it's a special section, or it's like outside of the public record, so that contractors aren't like, fighting each other.
Yep.
Be just like a job interview, just be like an employee interview.
Exactly.
Be an executive session, I would imagine.
Yes, they have to be.
Yeah.
Okay, that maybe just went, hopefully for the best. So if that can go out, just forward the email of the, RFP request after you guys have a chance to review it. And that outlines that there's a scorecard in addition, so like the interview is 30% or whatever, so when you rate every contractor, there's sort of a record explaining why you came to the decision you did.
Sydney said they'd be 50 minutes to 55 minutes for the interview.
Yeah, and that gives them, like, the beginning pieces for them to present their
For
proposal. and
for
then-
each person? Wow.
And I've already got it scheduled, so
Okay.
you're gonna work through lunch one day.
October 31st is when this is set up for.
Okay, there it is. So you would grab the RFP for CMR? Is that the one to print off?
Yeah.
Okay.
Is RFP to approve and sign, we haven't received any of those that document at all, have we?
I just got it from Kurt.
Yeah. Got it. It's being taken care of.
So the RFP is gonna look a lot like your RFP, same little binder thing with just kind of some of those fees and a little information added. Cause the first submittal's like pretty generic, that went out to 30 people, you wouldn't wanna move forward with all 30. So then after the interview process, we can talk about like, who we prefer, whatever, who presented better, and then look at those costs and stuff, and then decide who to go forward with. And then once you prove that, we can work with you on like how that contract works with the contractor, with the construction manager.
Were you or any of your firm gonna be with us for the interview?
Yeah, we would be happy to have someone here with you. And we could also kind of talk about some of the interview questions that would be good to talk about. the construction's all pretty standard, but I know like, you know, we've probably been through that more than you, so some of the big things like change orders happen, and what the process for that is. They're gonna do an owner-architect contract meeting at the trailer once construction starts, so every week or every other week, we want a representative from you guys, and that'd probably be the sheriff, or, you know, we'll assign who that is, and then what that process is. Every month, the contractor will send a pay app, so if they like buy a bunch of bricks, and they kind of send you with the schedule of values, so it'll say brick, wallpaper, whatever they bought that month.
Does it have to be on site or just produce a?
I'm sorry?
It has to be on site or produce an invoice?
The pay app does not have to be on site, but that's something that it will always be signed by us as well as the contractor and you guys. So we're gonna want someone on site to verify, so if they said concrete's 30% done, we're gonna have eyes on it to say concrete's in fact 30% done.
So we need to make a motion to send this out, or just agree to send it out?
And if you can, yeah, motion that you approve the three to move forward to the next phase would be.
So I'll make the motion.
Okay.
All second.
Any more discussion?
I was waiting on Bob.
No,
I mean, this is a part of the process.
I think we need to move on with it.
Yeah, the sooner the better.
Been moved by Tom, seconded by Tim to continue with the request for proposal. Any other discussion? Hear none. All in favor say aye.
Aye.
Motion passes.
Oh,
So does this need to be signed?
Kurt, good question.
The motion is to have that.
Oh, for the new, okay.
That's what they're saying. Because it has all of it.
Need anything else from us, Kurt?
Mostly, if you have any questions, so on October 25th, Angie will get another submittal, same as kind of the one before, and then we'll come down here on the 31st and take a copy and help you out with the interview, sit in, you know, answer any questions, ask any questions. I want to make sure you guys are comfortable with that, or if there's anything else I can do to help you.
I know normally Wade draws up the questions to ask, but really, do we know what questions to ask? You might be better off to work with Wade to get
I think if they just
questions, or if they
send them to me ahead of time, then I don't know if I'll have anything in addition, but at least we'll have them ahead of time to review and look over.
Yeah, and if you know, we could do a phone call or whatever and kind of explain some of the stuff, like it'd be that construction process and who needs to be there, who needs to sign what, you know, how they manage change orders, just general stuff like that.
So I will go ahead and send these to the three that applied, right?
Yep.
And then publish also in the paper, right?
This doesn't need to go to the
Then-
paper.
then it needs to.
Then it's only the three contractors, then we'll know
Gotcha.
what we're asking for the,
Okay.
for that next middle.
Okay, I'll send those out today then.
That's great.
So one of these needs to be signed,
Yes.
correct?
Yes, so I can scan it and send it.
And then where this has a pre-construction fee, it's not gonna include the cost of the project, because we need to have our drawings developed a little bit further before they know really what the project's actually gonna cost.
Do I need a motion to direct the chairman to sign, invitation to submit proposals? Wade?
Yes.
I'll make the motion. Or did you?
Tom's moved,
All second.
Tim's second. Any discussion?
I'd make it a little more clear since it ties back to the motion that was just made for the RFPs, but it's the at-risk construction management for the new Coffee County Law Enforcement Center request for proposal, just so it's clear.
All in favor?
Aye.
Aye. Passes.
Okay, if you're all comfortable, I'll get out of your hair and thank you for your time. If you do have any questions, feel free to reach out. I know that there's a lot going on right now, and it is actually pretty kind of complicated, so
It gets that
we're here to
way.
help you in any way we can.
Appreciate it.
So while you're still here, one of the things that I think needs to be stressed right now is on everything that occurs from this point forward, time is of the essence, so if they send something out, it needs to get to everybody as soon as possible for them to review and then be ready to take action if needed on that Monday, because if we delay a week, then we're delaying progress, and that's something that Larry has stressed to me and to Sheriff Johnson, so that's
Yeah.
something Larry has communicated to you as well.
Time is money, so right, if you draw out the schedule, everything costs more.
So anytime something comes in, I'm not sure who needs to be there's several of us who received those emails, and I wanna make sure that there's clear direction on who is gonna get whatever the content of those messages to each of you without violating the Open Meetings Act. So if it gets to you, that's the goal, so that you have it prior to the meeting. I get it, usually Sheriff gets it, I think Angie gets it, and Andrea gets it, so. and then-
Sometimes I do, sometimes.
Well, we're just gonna pretend that you don't get it, so that
Right.
the three of us can maybe coordinate to make sure that you all get it. And maybe we each need to have a sort of a check on each other to make sure that, hey, if Angie didn't send it, I send it. If I don't send it, you send it, but we don't wanna.
Everybody communicate together.
But if it's sent to the clerk can send that out to all of us with no response. And she's been through that route before, so we can all get it and it's not a violation.
And we just need to make sure that it goes to Angie instead of just to me or to Tom. Some things go, I don't know where everything goes, but I'm usually a part of those emails, just copied, blind copied. We just need to make sure that Angie gets it, because if she doesn't get it, then it's not gonna go to you. So,
Well, or just make one person your person,
Mhm.
and that makes it a lot easier,
Mhm.
because it's gonna be hard during election time for me to run around asking everybody, did you get that email, did you get that email? Just make a designated person, and that person sends it out. I mean, that's what we've done before. This is too big of a project to mess around with.
Have 14 people
14
trying to
people,
make-
yeah. And the one today, I mean, I did not get it, so I don't know.
I didn't have.
But I did
didn't
get
see
these,
anything
and I
either.
sent these out to you, because I know when a project like this is going on, I know time is of the essence.
With the election and everything, would it be best to have Andrea or Wade?
No,
I was
I'm
actually
fine with
thinking
it,
the opposite,
but,
because if everything's going through you to publish and do all that, it's probably easier if it.
yeah. I mean, I'm fine with that. I'm just saying, with the election going on, for me to then go start chasing everybody down, that, I don't need to do that.
Alright.
Just when I get the email, shoot it out. And I'm fine with that.
Works for me.
For me.
Okay,
So if you can let Larry and whoever else
everything
know
should definitely be going through you.
at
We're
this
kind
point, and
of
copy
copying Wade
Wade
and
or
Sheriff
whatever.
just as a courtesy,
Yeah,
but yeah,
and then I
you're,
can send it out to everybody.
you're the point person.
Because if we have, like I said, if we have too many people, then, you know, it's getting confusing in your office.
You get a full emails and then you don't read any of them, right?
Yeah.
Nobody likes that. Okay, everybody's pretty comfortable? And as I said, we're here for you, so if you do have anything comes up, feel free to reach out.
Okay,
Right.
thanks,
We'll
Kurt.
be back in a couple of weeks to do interviews.
Thanks,
Sure.
Kurt.
Thank you.
And to go along with what Kurt was talking about, I asked Sydney to put together this list so that we have a calendar of events to kind of start going now, because like you said, time is of the essence, so you guys need to know what's coming up next and not be wondering where should we go now, and then also she had talked to, Greg to put something in his book too, so we'd have a schedule, because the schedule is gonna be very important on a project like this.
Very important.
Yes.
Yeah,
And not,
yeah, we got that last Wednesday or Thursday from Angie. That gives us all the information and particular dates to make sure things are done, so. Just have to keep adding to that every
Yeah.
week.
Yeah, it will be updated as we go along.
Okay, thank you all.
Thank you.
thank you.
That's basically where we've been at.
It's been a busy morning. I wanted to be here.
We took some action on this, I'll get with you after the meeting Thursday.
Okay, that's the, security, okay.
What we did,
I was gonna ask about that in roundtable.
we did that, but. So,
And I'll bring it back up, so when you get to round 50.
I guess we're at roundtable, Wade.
So I kinda feel like the information that was presented, the motion and option number 5, we probably need to go backwards just a little bit to sort of fill in maybe some of the blanks. And
I gave him that copy.
oh, you have it, okay. So if you recall, the proposals were presented by, Steve Prasco for the ballistic glass in all but 2 of the offices within the courthouse. Then you directed me to see about the east entrance. Mr. Prasco presented multiple options for the east entrance. Originally, he wanted to use the west entrance, and said that wasn't gonna work because with the new jail, the parking lot, and it just wasn't an option. So he sent multiple options, 5 options for the east entrance, in coordination with the sheriff and undersheriff, who would be responsible for the overall oversight of that entrance, including, and probably most importantly, the district court, because it does require the sheriff to maintain security within the courtrooms. The sheriff and undersheriff elected to go with option number 5, which is where we are. So prior to you arriving, Jesse, the sheriff requested an executive session to talk about security measures related to the proposals and the options. Why the security measures are important and why it's an executive session topic is it talks about courthouse strategy, the number of people who would potentially man that security checkpoint, as well as the number, and that's, for right now, that's not for public dissemination. So the option is approximately, if I recall, about $120,000. And according to the sheriff and undersheriff, it meets the needs of what the county would require for this courthouse. Now, as you'll see in that particular option, there's a magnetometer that goes into the courtroom, and then a doorway that goes out into the courthouse. And nothing as it exists currently for someone to come into the courthouse other than going through a door would change, is the summary. So
I might add, by going this route, it's 129,000 instead of, is that correct?
approximately 120.
Instead of the 460 that it would take for individuals to still not have everyone covered,
So the board, without you, decided to move forward with getting some firm proposals on what that looks like. So I will contact Mr. Prasco and see if he can put something a little bit pen to paper and then bring it back, and what a timeline would be, what the cost of materials would be, that kind of thing. Because from week to week that changes, and if you recall the last time he submitted a proposal, it was a 15-day quote. So we don't have a firm quote on this option.
Well, in my eyes, this option number 5, you know, it protects 100%. It doesn't protect anything from the outside coming in, other than right in front, the east entrance. Those windows, I believe, those will be bulletproof, will they not?
I'm not sure they will. I think
Okay.
it's coming into the building,
Actually, physically in the building.
physically in the building, and then you'd have somebody who would be manning, this station, so to speak, and you'd have, the ability for someone to roam the courthouse, so to speak. The other part of this that probably needs to be looked into, and I think Brad would be the one to look into it, is what it would take to secure the west entrance, similar to what the downstairs door is, and to have employees keypad and that kind of thing. So, I'm not sure if that's something you want me to talk with Brad about, want Angie to talk with Brad about, or Andrea, doesn't matter to me, but I think that's something that's part of this project overall too.
You know, not, I mean, so many times, somebody going in and shooting something up is a hostile employee. It's not some flipped out person off the street. It's motivated inside. They would possibly have the key still to enter the building at an
That only happens when
Post office.
only happens at post
You
office.
still have a security,
You have a security individual there, but.
which is a quicker response time as well.
What I see about this still gives the citizens of Coffee County access and availability to their courthouse
Freely,
freely.
for the most part.
We're not taking any rights away from them.
So there's no, put your change in a bucket, run through a scanner, put all your metal parts in a bucket and go through a scanner of some sort to enter the rest of the courthouse other than the actual judge court.
The courtroom requires it, so it would not be set up similar to, I think, Osage County. For example, if you go to Osage County, everybody goes through
Billy walks off the street, comes through the door, walks up, visits with the security individual, rolls on through.
This would be different in that if you're going into the courthouse to do county business, you go through the west door. You go in the east entrance and then go towards the west, and that west door that you see in that diagram. Or the door to the west, I guess is the best way to describe it.
Yes, but they don't go through a metal detector or anything to that sort.
They indicate where they're in the building to do county business, and my understanding is they would go through and proceed. And then there would be a law enforcement presence, whoever is manning that area will be a law enforcement officer under the sheriff. So they'll be full garb. They'll just be down in the lobby, is my understanding.
No, I agree. I think it's the best option.
Okay. So, just I guess it was good you weren't here, so you could be updated as well.
Wade, question?
So it's gonna be manned all days, not just court days? There would be someone stationed there?
That's my understanding.
So
That's more of a sheriff question.
Okay, so what's the objection to having everyone go through a metal detector to come in the building?
That would be, I think you'd wanna call the sheriff back up here to discuss that, because it's a sort of a law enforcement, driven as well, I guess is the best way to put it.
I mean, if you're gonna have the metal detector for the courtroom, and I know they'll probably take a different layout to do that, but if it's gonna be manned, why wouldn't we have them do like Lyon County and Osage or whoever that?
The courtroom requires it in security, as
Yes,
it even
sir.
as of right now.
Right.
So, it's, we don't want to take people's freedoms away from them. We want to keep them all the freedoms they can have, and we don't want to start body searching people.
Well, I mean, if you walk through if you walk through a metal doorway, you know, and it goes off, the officer would be there to check you out.
Is that what we're gonna do?
Well, I mean, if that went that way, that's not the way it's sounding, it's just gonna be a door, you're gonna check in
I'm
with
just
the officer.
asking, I'm not
And
questioning.
if a person's got a concealed carry, if a person has a concealed carry license, and which you don't have to have a concealed carry, you know, how do you work that? You know, with a
Well, I think
metal
they
detector.
Probably check their weapons if you're at a courthouse that does that, don't they? You leave your things there.
I've never walked in,
Well, I've never walked in one with a gun, so.
I've never walked into one outside of Coffee County, I guess I should say, so.
Yeah. That's the way Lyon County is, the only one I've had experience with.
There's nothing enters that courthouse or that building at all.
Yeah, I take my stuff out before I leave my pickup,
Yeah.
empty my pockets, so you don't have to,
Do it on that too.
you know, have anything that sets it off.
I mean, that would be the only thing I would say is that if you got mad individual X at somebody at the court, or, you know, within this courthouse, they walk through that door, check in with the guard or the security, and rolls right on through and shoots the place up, you didn't do any, I mean, you didn't save anything, but spend $130,000 on a failed deal. I mean, I guess I don't know, that's just what
I understand. I think if you want to push that scenario out a little bit further, I think you need to get the sheriff and undersheriff back up here. They've done the active shooter, scenarios, that they're well versed in courtroom and courthouse security, and I think they would be in a better place to answer those questions than I would.
Well, and these guys had that chance to visit with him in session, so they know the response to that, I assume, and I'm fine with that. I was just wondering why that we couldn't get a higher level there if somebody's gonna be posted there anyhow. That's my question.
I think you can always get a higher level of security. That's
At what point are we comfortable?
That's a
with
choice.
that? Hasn't been an issue here, so.
I mean, it's the same question that any board of county commissioners anywhere in the state can have their courthouse, no weapons. And
well, I don't wanna reinvent the whole morning, you know, by no means. The board passed it to move on with this going, I'm fine with it, I support it.
This is the beginning.
Yeah, it's a beginning.
This is the
yeah.
beginning.
Yeah.
That's what this is. This
Yeah.
is just the beginning.
This is just to get more information from Steve Prask on what the cost would be, what it would look like, and how about this? It's still fluid if you want it to be fluid,
You good?
but you gotta start somewhere.
That is for sure.
Anything else, Wade?
You might come back to me, I'll need a 15-minute executive session. Unless you wanna do it now, it doesn't matter to me. Attorney, client, myself, the board, county policy, specifically the drug and alcohol policy for the county.
I'll make that motion.
I'll second it. Been moved to second for 15 minutes, you say, Wade, with the Wade and the commission for attorney-client
You've moved?
I am.
Tom moved. Any discussion?
I second it.
Discussion.
Here, you might run.
You're here, you do it.
Can you run around?
No discussion, all in favor, say aye.
Aye.
Motion passes. You said 15 minutes, right, Wade?
Correct.
I've gotta get this thing going before we,
Let's go with that 1:30, so we can stop, take a break on the way back. Can we do that?
yep, I finally got to take off seconds, so, nope, it quit. We'll enter at 11:30. 15.
You don't give me wording that somebody wants to add part of their project.
I think all that conversation is important.
I agree. I would do it.
Sign this,
That,
the minutes, or last, the,
only the ones that he started the meeting. Is that you or him?
but they approved it this morning.
Oh. Well, no, you were the one that ran the meeting. that
Okay,
day.
okay,
Today,
okay.
you won't.
Okay,
Yeah, okay.
okay.
Do I need another copy?
Cool. Give this to you in a minute. So what I just handed you was sort of an update up to present, well, I guess not up to present time, up to September 28th of 2022. It's a workers' compensation sort of summary and kind of the type of cases the county's dealt with. It doesn't have it broken down. I have more of a broken down list, but it has some information that probably would contain potentially HIPAA type material. That I'm not gonna hand that out because I'm not gonna violate HIPAA. So just so you have an idea what's going on, it goes 2017 to 2023. Cut, puncture, struck, fall, elevated, overexertion, fall, slip, motor vehicle, just kind of a breakdown. I've asked for Trust Point to provide a quarterly update. This is for the third quarter, with what they provided to me.
This one.
That's the second page.
I believe that's right. And the information kind of covers all across the county for workers' comp, so,
This one, all across the county? Not just county employees, but all across the county?
this is county employees, so workers' comp related.
Okay.
Sorry.
No, it's all right. Just one.
So the additional information I have would be helpful to explain things a little more, but we can talk about some of that in an open session.
I get it.
I thought this was a decent summary. And I thought having this quarterly would be helpful so that you kind of had an idea what was occurring related to workers' comp claims.
Like a snapshot once a quarter, see where
It is.
things are happening at.
Yep. So if at any point in time what you see sort of as a repetitive or continuous or ongoing issue, it may mean that you reach out to whoever your department head is in that particular area, or just overall, and have some, education.
I see this 20% because EMS did a presentation at one of their meetings here a while back, and across the state of Kansas, over 50% of all EMS calls are fall-related on even level ground.
Not paying attention where you're stepping.
And here is 20% is fall or slip, on probably even level ground.
Which is below the national average considerably.
Yeah, it is.
But still, it's an issue.
Still our top issue.
I wonder how many of them are on the phone looking at it.
That's why I don't wear my glasses when I walk, because I won't be walking very long.
And in the winter months, walking out to the parking lot, and we go back, hopefully the footage isn't there, but I've wiped out pretty hard before, and to my own fault. Hopefully it's still not there.
Put it on the fail army.
I think it's just one of those things where walking along and lose your footing and you go down. That's what I've done at least.
I have too.
Yeah, it happens.
So, I thought that would be, helpful. And then the last thing I have, unfortunately, is a 5-minute executive session on pending or ongoing litigation, myself and the board, and it will be for an update related to that litigation.
You've never had a 5-minute executive session?
I have.
Have you?
One.
I will so move for the 5 minutes.
I'll second.
Bob's moved and seconded. Bob's moved. Tim seconded. 5-minute executive session, the board and county attorney. Any discussion? Hearing none, all in favor say aye.
Aye.
We'll go in at 11:55. For 5 minutes.
Five minutes.
I mean, you were done in 5 minutes.
Yeah.
You want 5 minutes?
No. Sooner than 5 minutes. Because it was a-
Didn't you? Was you done waiting?
It's happened twice now. Moving back to the drug testing policy, I renew my suggestion from a week ago, 2 weeks ago, that the board, for the immediate time being, suspend the drug testing policy that includes anyone other than the DOT or critical. Does that make sense?
So how are people gonna know what critical is?
We're gonna get that ironed out here pretty quick. But for right now, I think that, anyone who's, and if we have to sort out the critical, hopefully I'll have a better definition by next week, but I don't have it right now. I think, critical, includes, well, we'll just sort that out. I don't wanna give a definition because I can't give one off the top of my head.
But this still includes for reasonable suspicion.
So
That's
pre,
not part of this.
pre-employment, post-accident, reasonable suspicion are a part of the policy, and it doesn't matter what your position is. So, now, if somebody is tested for reasonable suspicion, and we'll use one of the employees within the county attorney's office under an elected official, they can be requested to be tested, but if there's an issue, it's up to that elected official to determine what their discipline is, if at all. So that's the only caveat, and that can be, I mean, that's the policy as it is. This is only suspending random testing of non-DOT or whatever the right terminology is, and critical. Or the compliance one lady, she said, how did she word it? Non-DOT and DOT. Is that how she had captioned it? I can't remember now.
Yes.
She did say DOT and non-DOT.
So it would
Suspend non-DOT.
So it's not asking to do away with any of the policies, because I don't know if there's, we just need to clarify some areas. Make sense? Somewhat?
Do you need a motion for that?
Yes.
And I'll make the motion as described.
And I think that would mainly be section 16, 17 is DOT. So it would be specific to section 16 within the current, handbook.
Tom's moved,
I'll second.
Tim seconded. Any further discussion? Hearing none. All in favor signify by saying aye.
Aye.
All opposed? Aye. Passes. 4-1.
I respect that.
I agree with it both ways. It's confusing as it is right now, but I've been a drug screen beater on here ever since I got on, and believe it's a valuable tool in our tool bag to ensure of covering our backside.
And I agree with that. The reason I voted for it is because there is no evidence that the county has ever made that policy. I think that someone has just decided on their own to do it eventually down the road somewhere, and that's how it came about. So if we don't have a policy, I don't know how we can try to enforce something that is without needing a policy. So.
I agree. So there we have it.
So, with that being said, although I'm neither DOT nor critical, add me to the list. I'll be on the random list. You can test me anytime.
I'm the same way.
Same here.
Same here, and and for 2.5 months.
I think I'll just bow out.
Is that
all
all
I
I
have
have,
for
Mr.
today.
Wade? Okay. Angie, got anything good for us today?
Today, I do not. I think we've covered everything when we went over the schedules of things to come, and I think if we have everything lined up, hopefully the project will move right along, and it's probably gonna start cooking pretty fast, so,
Fast cooking, good.
yeah.
I really don't have anything other than I went up Thursday night to Osage County on their zoning meeting on the wind turbines and solar panels, and it was a 5-0 vote on their zoning to not allow them in the county.
Zoning shut it down, huh?
Yeah.
Speaking of which, I was going up to Winsburg Saturday night. Is there one of those windmills out there missing a prop?
Yeah.
I thought so. We couldn't get close enough to see it though.
Did you see the ones leaking the wall?
Yeah, I did.
So they shut it down?
Shot it down. Now it goes to the commission. I think they said that.
Commissioners could go against it, but they probably won't. There's only 3 of them up there. Yeah, one of them won't. Tom, do you have anything?
The deal with Wade took care of one of mine, but the other one, Ms. Christina's coming next week, would be, to go back to conversation we had Mr. Cooper last week about, I asked him if he'd seen a lot of counties hiring without the county, outside the county for employees, and Ms. Christina's gonna be here next week discussing our policy manual, I believe.
24th.
Oh, the 24th.
Yeah,
Anyway,
sorry.
I'm gonna, when she's here, I'm gonna make that motion to strike that one from policy. Let's try to do it now, but I agree with what Mr. Cooper said. You're really, it's not that we don't have good people in the county and all like that, but you are limiting yourself severely. Severely.
You know, I'd agree with looking at how many people apply lately.
Correct. I mean, you could use the fact that they live in the county as, you know,
As a bonus.
as a bonus. If they're not the most qualified, then at least you can step back.
Yeah, it does I mean, it does tie your hands around the back a little bit.
I would be 3 employees less if I
Only had to hire him.
Yeah.
Yeah.
If I miss one, I'm missing 10%, so.
Yeah, I wouldn't have very many myself.
It's hard finding employees right now.
That was all I had.
Well, if you wanna make a motion now, you make a motion now, or we can wait until Christina shows up here and we can discuss. If you want further,
Yeah, we can wait.
further input from her if she knows more outside.
Well,
I think she's
and maybe
mentioned,
that'd be the thing to do.
I think she has mentioned that a lot of them has taken that out of their policy.
Yeah.
Something rings in my head.
I believe she's not, she's
But
one
she's-
of the ones that said it.
We'll wait till then. Bob, you got anything?
Yeah, I've, always thought that it was good to have people from the county in, but we've already violated that, policy once, so if we're gonna violate it, we might as well just take it out, and I agree that, I think right now, we're not having a problem getting local employees, but someday we might, so I don't have a problem with that. But I do have here, certificate of appreciation from the American Legion last Wednesday. We had Government Day here, all the seniors from the county came in, and they went through the courthouse and different offices and found out about government. They all seemed to be very pleased about it, and I think it went real well. This is something that, American Legion has been doing it for 5 or 6, 7 years, I don't know how long, so. But I think it was a good deal again, with all the kids, so. I just appreciate that you guys let me be a part of it for the last time, so.
Good. I'm sure you, instructed them well.
Well, the good thing about it was, one of them was my granddaughter.
Oh, really? Cool.
So I got to finish off with a good note with her, so.
Yep. Is that all you?
I have nothing.
Not working your list off very fast. Don, you got anything?
That was after the wind farm at Waverly, in reviewing the contract that we have, we need a lot more information on what happens when if that windmill farm doesn't go the full length of the time, and even after it's closed down 30 years. To me, there's nothing in place to clean that operation up. And we need to absolutely do some discovery, see just exactly what's gonna take place when something happens up there.
There is something in place, just that we can't find it.
Well, and the details that we got, Bob, you know, that $2,500 per site for the first 2 years, and then it goes 5,000, then it goes to 10,000. The total of all those 30 years totals 29 million.
Yeah, but it
I have no idea how to
Don't
interpret.
start until 10 years
I have
down the
no idea
line.
how to interpret any of that.
Well, it's pretty clear, it's 10 years after continuous operation for 10 years. That's concerning. That's real concerning to me.
I was hoping to hear back on this past Friday from the corporate office. I put in a couple of emails and phone calls. The local contact here at the wind farm says he doesn't have anything to do with that. So he's had me in contact with somebody in Houston from the corporate office who was out of the office, so he was gonna include the higher up boss in that. Was hoping to have had some information on how that whole process works by Friday, and they haven't. So hopefully I should have it, and I can email that to everybody.
I knew you were, but, you know, even though we see a document, it'll surprise me if it's a document to where we can understand it and know exactly where
My
we're at.
personal belief, not to interrupt you, and I apologize, I'd like to see a rep from EDP Renewables here in our commissioner's room. Let's clear it up. Would you guys feel comfortable with having one show up?
Most definitely.
Andrea, or?
I will still say, even though, and I don't wanna be arguing about it, but back in 17, we had reps from that organization here. It was out, and just because Don doesn't understand it, or can't find it, none of us can find it. There is something out there that explains it very detailed.
I wanna see
How
it.
this is gonna work.
I wanna see it and I wanna hold it.
I don't know where it's at, but there is something out there.
Let them come in and give us the detailed information. If we need to get attorneys involved, we'll get attorneys involved.
I can try to call and get someone scheduled on the agenda.
There's as many windmills that appears to be having issues.
Yeah. Let's do it.
I'm sorry, what's that?
I can get someone called and scheduled on the agenda.
And the reason I say that is because when 5 years before that, when we did it with the demolition part, I think we only had it at $12 million at that time, and the commission at that time said that's not enough money. So before they would even renew the contract with them for it, they had to come in and make this other arrangement, and that's why you see the payments and the deal it is, and that's the way that was set up. Our attorney was involved in it one way at that time, but, so there is something there, and I don't know where it's at. They may be the only people that have a copy of it, I don't know, but it's out there.
I hope there is something out there.
There is, somewhere there is, just finding it.
Mm-hmm. That all you got, Don?
I don't have anything else.
Andrew?
Just a couple of updates. Modern Air is here today to do the outdoor air conditioner that was leaking Freon. They've also spent the majority of last week trying to figure out why one of the boilers wouldn't enable. So right now they have something bypassed. So I'm having to get with Tom to see what, because it sounds like it could be a significant fix to figure out one of the issues with the boiler, but he said part of that is that it's not communicating to the system, which is why we need the upgrade, which got put off a week. EMP Shield wasn't available to come out last week to do the walkthrough with Creighton, so that's gonna happen this week. So hopefully, all those kind of working together will help the boiler issue. And the bathroom, Cook's Plumbing was in. It's fixed to where the drain is not leaking at the moment, but it might end up becoming a much more significant issue if what they're hoping works doesn't work, so we'll see how that goes.
Just putting a Band-Aid on it.
Yeah.
Put your Band-Aid on it.
And that's kind of it, the same.
Duct taping it.
Yep. Put lipstick on a pig.
I have one last thing.
One last thing?
I have sent all the RFPs out via
Okay.
email, so they are gone.
Sweet. Hopefully we'll get something back. I think we went over, I had the drug screen deal on my mind, and I don't remember what all I missed this morning, kinda went over most of it, but I did see that, October 14th, which is this Friday, Take Back Our Country in Ottawa, Kansas. Ted Cruz and Amanda Atkins will be there at noon at Legacy Square outdoors at 125 South Walnut.
North Main,
North Main.
that's that new covered parking and everything, North Main on the west side.
Where at again?
Ottawa.
I'm gonna try to attend it.
I'll be going,
Yeah.
probably taking a couple of my kids.
So, if anybody's interested, I really enjoy listening to him, Mr. Cruz.
You know, 2 weeks ago, or maybe 3 weeks ago, there's a cancer dinner tomorrow.
Yeah,
Are we supposed to be participating in that?
can if you want, you're not required to.
And that's down, okay.
4-H building.
4-H. I'm gonna volunteer my services to serve.
Tomorrow I gotta go to Wichita.
Tomorrow I'll be in St. Louis.
Looks like it's between you.
Bob's always down.
I will be
I don't
there.
mind it.
I'll be there up for the,
The only thing I don't like is
Last
Cameron
week of the
Ross
year.
always looking at me to throw up a bid if he can't get one, and then I wind up with something I didn't want.
You need the sheriff to come down and handcuff you. That way you
Then I
can't.
serve the food.
Well, after the bidding, or after the
He
food.
does it while we're
Oh, he
eating.
ignore
does.
him.
Sit on your hand.
When he
I
says,
figured
hey,
something
when
out.
he says, hey, Tom, just
Other than that, we've got some,
I don't mind it.
paperwork to sign, I
good
guess,
cause.
Yep, it is a very good call.
before we end our day. I will apologize for not being here first thing this morning, but
Step on your water.
my daughter called at 12:50 this morning and said her water broke.
Oh. So your grandpa?
Would you call a plumber?
Shut the faucet off. So,
Squeeze your legs.
yeah, and so, off to Topeka we went.
Congratulations.
Thanks, as long as everything.
They look
fine.
adorable.
That's the most important
Yep.
thing.
Everybody's healthy, so,
It's the main thing.
So the job's complete then?
job is complete.
Yeah. Well, you just said her water broke, I didn't know if that's the end of the story or whether we were.
I've got two grandkids now, so a boy and a girl.
Well, good for
You'll
you.
enjoy them.
I don't know about this grandpa stuff.
No,
You'll get used to it.
nothing better.
I guess you can always send them home, just as long as they're home.
After you spoil them a lot.
Give them some Mountain Dew and send them home.
Don't think about grandkids, you can always send them home.
Mm-hmm.
Sure.
Were your kids, you couldn't send them home. But your parents could.
Grandpa don't tell me no.
There's checks to go with that, Bob.
Checks with that group.
There's the other one. 34 weeks. That's what they were. 3 pounds, 3 pounds, 8 ounces was, baby girl, and 3 pounds, 13 ounces was Ellie, and 4 pounds, 8 ounces was, Brittany.
Better enjoy cheap
How do you
fuel
say
for
that?
a while.
Brantley,
Brantley.
Brantley, B-R-A-N-T-L-E-Y or something like
Yeah,
that.
my-
Maybe it's Brantley.
My kids were 2 years old before I could even remember their names.
I have a hard time remembering one.
They live nearby.
They both thought their names was Hey You.
Sir?
They live nearby, do they?
Yeah, Thelma Road.
Great, great.
Cemetery north, a mile and a half.
I think. That's really nice.
Yeah.
I'm fortunate about all mine do too.
except they live in Bob's district.
I was gonna say, I'm thinking they live in my district, so they increased my district. You weren't out to Lake, were you?
No,
Okay.
we was in Oklahoma yesterday morning. Luckily, it didn't happen over the weekend. Grandma would've been at something else.
You know, they were probably gonna have one with or without you.
Yeah.
You'd have been a route real quick home. Yeah. Yeah.
There's checks for that, Tim.
You'd probably have to rent a car
We're
for-
starting right now.
Yeah, for mama, for grandma, yeah, yeah. Rent a car for grandma, to get home. Get her an Uber. That'd cost.
Just don't get her an EV, she never make home.
Mhm.
You can quit passing these down at any time.
We're a little stuck today.
There you go, just retirement.
Retirement report, but it's not looking very good. Looking good for you, not for me.
Don't rate my 401k is headed south.
Got a deal here for, I don't know if this is,
We all got one.
you all got one of them, okay.
Yeah, 401k may be heading south, but you're purchasing more shares at the lower value too, so it's a plus down the road.
I hope.
It's not a loss unless you pull it out.
I keep telling myself that. Okay, Tom, there's two in here. Nobody else has signed, we'll need to hand that back.
Man, this year's getting by so fast. Wow.
That's the little one that's just stuck on there.
Did you guys do a time clock today?
Yes.
Yeah.
Yes.
You did? I didn't see it on the,
It wasn't.
Oh, just a most proven.
was Jeff in this morning? Jeff wasn't in this morning.
No, he's in, we just signed Jeff and Ryan are actually,
I seen Jeff out at the church basement when I pulled in. I had to call him on the way down because the mower went around the sort of curve
that's next.
south of Lebo, and there was a lot of rocks on that outer curve, on the outer road, so I called him, I said, you better get a broom down there and clean them rocks off. Clean them rocks off. What do we got here? Of course, carton, like this, and Connie. Planning board, do we have a meeting this week?
I think I gave me, agenda for it, so yeah.
What fund did we give the contribution for Mike's lunch to? What,
Cancer support group.
cancer support group?
Next regular planning board meeting is
And that went out
Wednesday,
at
October
the end of this
19th.
last month.
So, she should give that to me this week, then I can email it to her. send it to you and to them.
Okay. I think that's it.
Oh, we can get that.
Are we done? Done signing everything?
Tim,
Bank.
you done, Tim?
Yeah.
Okay, Tim done.
Anybody else have anything?
What do you want,
We will adjourn at 12:29.
Do you wanna keep this one? Usually she brings something. For you.
Uh,
Oh, okay, yeah.
Yeah, I'll sit here, that way I'll remember it.